Ladies and gentlemen, good day and welcome to GAIL India Limited Q2 FY23 earnings conference call hosted by Yes Securities Limited. As a reminder, participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Tiwari from Yes Securities Limited. Thank you and over to you, sir.
Thanks, Lizanne. Good day, ladies and gentlemen. On behalf of Yes Securities, I welcome everyone to GAIL India Limited's second quarter FY23 earnings call. We have the pleasure of having with us the senior management team of GAIL led by the Director of Finance, Sri Rakesh Kumar Jain. I will now hand over the call to Mr. Jain for his opening remarks, which shall be followed by a question and answer session. Over to you, sir.
Thank you, Mr. Nitin. And good afternoon to you and to all the investors and analyst community connected with this conference call for GAIL's earnings for Q2 H1 22-23. The fiscal and financial performance for the quarter ended September 22 is already with you, and same has also been made available in the GAIL's website. As you are aware that there has been supply disruptions from GMTS under the contract from the end of May 22, and GMTS has not delivered 13 numbers of scheduled LNG cargo till September 2022 during financial year 23. In total, 17 cargoes till date, 13 in Q2 and till date 17. Subsequently, GAIL has taken up various measures to maintain reliable and sustainable supplies to its downstream customers, LNG customers, by reducing its own internal consumption, procurement of additional volume for the spot market, and imposing suitable curtailment of supply. Moving on to the financial highlights, GAIL achieved gross turnover of rupees 38,440 crore in the current quarter, as against rupees 37,536 crore in quarter 1 financial year 22-23. There is a marginal increase by 2%, approximately 2%, mainly due to higher natural gas prices, and this increase has been offset by, the increase could have been more, but has been offset by decrease in LHC prices, which is approximately 12,000 rupees per metric ton. This is for LHC prices, and approximate rupees 10,000 per metric ton for petrochemical prices. Profit before tax for Q2 decreased to rupees 1876 crore in current quarter, as against rupees 3894 crore in quarter 1 financial year 22-23, and actually this is down by 52%. In terms of amount, rupees 2018 crores, and this is mainly due to decrease in gas marketing spread, lower petrochemical and LHC price realizations, increase in fuel expenses in natural gas transmission due to deallocation of domestic gas 0.45 MMSCMD from gas transmission segment with effect from 16th August 2022 onwards, which was partly offset by increase in other income, mainly dividend income in this quarter, rupees 568 crore. Profit after tax decreased to rupees 1537 crore, as against rupees 2915 crore in the quarter 1 of financial year 22-23, and this is down by approximately 47%. On a half-yearly basis, GAIL achieved a turnover of rupees 75,976 crore, as against rupees 38,829 crore in first half of last financial year, that is 21-22. This is an increase of approximate 96%, and this increase is mainly on account of increase in natural gas prices, both domestic and RLNG, higher price realization in petrochemicals and liquid hydrocarbon segment. There is a marginal increase in profit before tax, that is by 1% to rupees 5770 crores as against rupees 5736 crores in the corresponding quarter last year. Profit after tax has remained almost flat, that is rupees 4452 crores for the half year as against 4393 crores in the corresponding quarter last year. Coming back to the segmental performance for the current quarter as against the previous quarter, that is Q2 financial year 23 versus Q1 financial year 23, gas marketing in terms of volume stood at 92.54 MMSCMD in current quarter as against 100.84 MMSCMD in previous quarter. The decrease in volume is due to lower RLNG sales and overseas sales. The natural gas transmission stood at 107.71 MMSCMD in current quarter as against 109.47 MMSCMD in previous quarter. If you talk of capacity utilization, this is almost 52% capacity utilization. Polymer production stood at 95 TMT as against 132 TMT in last quarter. The production has decreased due to lower availability of feedstock on account of supply disruptions from GMPS. LSC production stood at 228 TMT as against 227 TMT in previous quarter. The capacity utilization was 63%. LPG transmission was 1100 TMT as against 1055 TMT in previous quarter. The capacity utilization was at 115%. Now I will take up consolidated financials of Q2 versus Q1 financial year 23. The consolidated turnover in current quarter stood at rupees 38674 crore versus 37901 crore in previous quarter. This is also up approximately by 2%. The PBT in current quarter is rupees 1675 crore versus 4230 crore in Q1 financial year 23. This is down by approximately 60%. The profit after tax is rupees 1315 crore versus 3253 crore in Q1 financial year 23. Again, this is down by approximate 60%. On half-yearly basis, if I talk about consolidated results, the consolidated turnover in H1 23 stood at rupees 76575 crore versus 39290 crore in previous corresponding period, and this is up by approximately 95%. The profit before tax for financial year 23 stood at rupees 5905 crore versus 6268 crore in H1 2022. This is down by approximately 6%. The PAT is rupees 4568 crore in first half of current financial year, that is 22-23, versus 5021 crore in H1 of last year, that is 21-22, down by 9%. Now about GAIL CGD business. GAIL is having infrastructure of 123 CNG stations and 227 DPNG connections during the financial year 22-23 till September I am talking. 3 new CNG stations and around 25,500 new DPNG connections were added. In the next 2 years, we have target to add around 100 new CNG stations and 250,000 new DPNG connections. Now about GAIL Gas, there is another 100% subsidiary of GAIL for city gas distribution. During the current quarter, the gas gross turnover stood at rupees 2716 crore as against rupees 2663 crore in Q1 financial year 22-23, an increase of 2%, mainly due to increase in average sales price. The profit before tax was reported at rupees 101 crore in current quarter as against rupees 97 crore in previous quarter. The profit after tax has declined marginally due to rupees 71 crore as against rupees 72 crore in previous quarter. The physical volume during the quarter stood at 5.5 MMSCMD as against 6 MMSCMD. GAIL Gas along with its JV subsidiaries has infrastructure of 8 lakh DPNG connections and 348 CNG stations. During Q2 financial year 22-23, 7 new CNG stations and 11,104 new DPNG connections were added. During April to September 22, 9 new CNG stations and 32488 new DPNG connections were added. In terms of capital expenditure, GAIL achieved capital expenditure of 3967 crore during the first half of current financial year, and this capital expenditure is mainly on pipelines, petrochemicals, CGD projects, operational capex, equity contribution, and E&P. We have planned to spend approximately rupees 7,500 crore in the current financial year on similar areas, pipelines, petrochemicals, CGD. That means we have already incurred more than 50% by the end of first half of the current financial year. Project performance during the quarter, GAIL has commissioned Jamshedpur Spur line having a length of 123 km, Ranchi Spur line having a length of 4.6 km under the Pradhan Mantri Urja Ganga project on 12 September 2022. This will facilitate gas supplies shortly from grid to city gas distribution network of Jamshedpur and Ranchi. Now let me share with you about our acquisition of JBF Petrochemicals Limited. GAIL has been declared as a successful resolution applicant by the Committee of Creditors for acquiring JBF Petrochemicals Limited through corporate insolvency resolution process and received affirmative vote of 100% of the members of COC by value, and GAIL's plan has been submitted to NCLT for approval. That's all from my side regarding the overview of the performance and project performance. The management of the company is now available and we will be glad to clarify any questions that you may have. Now I hand over to you, Mr. Tiwari. Thank you. Hello.
Should we open up for questions?
Yeah.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Probal Sen from ICICI Securities. Please go ahead.
Thank you very much. Thanks for the opportunity. Am I audible to you, sir?
Yes, you are audible. Bit louder, please. It will be helpful.
So this is better?
Yeah.
Okay.
Perfect.
Sir, thank you for the opportunity. So 3 questions from my side. One, you obviously mentioned about the decrease in gas marketing spreads for this quarter. I just wanted to get, if you can, share a little bit about what kind of reduction you saw, because if we look at the basic differential between spot LNG prices and Henry, that decline doesn't quite sort of explain the extent of decline we have seen in our profits. So is there something we are missing? Is there a lag in terms of those prices, or were there specific cargoes that were redirected in this quarter that has led to the decline in gas trading profits? That was my first question.
Yeah. So you want to take one by one, or should I answer that?
As you wish, sir. I can ask the second or third question. I'll go ahead.
There is no single reason for the reduction in gas marketing spread. First, okay, if we compare with Q1 of this financial year, it is significant fall. But Q1 of this financial year, we have seen a significant growth in the marketing spread because of the marketing condition we had at that point of time. And secondly, there was no supply disruption in Q1, and prices of LNG and RLNG were significantly higher. So one thing that we have to if we compare with Q1, certainly you will find a significant fall, but nevertheless there is a fall. So the reason for fall is, if we talk in terms of normal circumstances, are 2-3 reasons which actually are contributing to this fall. First is, as I have shared in opening remarks, that GMTS has stopped supply from May. In last Q1 they supplied some cargoes, but from July onward they have stopped supply.
Sure.
And this supply forms a significant portion if we talk of RLNG of gas portfolio of GAIL, that is 20%. If we talk of overall portfolio, it is around 20%. And if we talk of in terms of volume, it is around 9 MMSCMD, 8.5 to 9 MMSCMD. So what GAIL did, GAIL was continuing to supply until we started making cuts to our customers from 16th of July. We gradually actually started cutting, but 16th of July we started cutting, and we brought down the fertilizer supplies to take or pay level. So that is one thing which has reduced our marketing spread. Second, as a measure to balance sustainable operations, we also started applying these cuts to other customers at varying take or pay level, which varies 50%, 60%, 70%. So in terms of volume, you have seen we have gone down. So that is one reason. Second, we as a company are committed to honor our contracts. So even though Gazprom was not supplying the volumes, but in order to fulfill our contractual commitment, we continue to source gas and supply it to our customers. And you know the market, what is the market in Q2? Market was significantly different than the price under the long-term contracts.
Sure.
So that is the second reason which led to, decrease in our marketing spread, and these are the two major factors which has contributed to reduction in our marketing spread.
That's extremely helpful, sir. Thank you. The next question I had was with respect to the polymer output. Again, the lower supplies continues to sort of, contribute to lower output from this segment. Just wanted your sense of how we should look at the second half of the year, sir. Is there any way that we can actually at least improve the output, or given the ground realities right now, we can expect sort of somewhere in that 100 to 110 TMT range for at least the polymer business till our supply situation is resolved? How should we look at it, sir?
So, this segment is a area of concern for us as well. If you see, if we have reduced the supply cuts to our downstream customer, as a prudent operator, we also thought, let us also reduce our internal consumptions to petrochemical plants, so that we are able to sustain pipeline operation and able to, supply. If I say that in proportionate to almost all the users, including internal consumers. So that's how we started reducing our production at Pata Petrochemicals. Second thing which will lead to reduction in Pata Petrochemicals is that when we don't have the sustainability of operations for a longer period on a spot gas is difficult. Actually curtailed our operations at Pata during second quarter of this financial year. Coming back to your expectations, how we will, do in quarter 2 or maybe quarter 3 or coming back. Yes, we are reviewing the situation constantly, and what we find that market has improved at least for moment significantly. I'm talking of current moment because LNG price, when I am talking to you, it may have changed. So market currently supports that we at least start our productions to a bit better level. So if you talk in terms of 100 to 110, we also expect that we ramp up to that level at least in this quarter, and we are actually taking all measures, including sourcing of cheaper gas from domestic and international market, so that we have production at that desired level.
Got it. Last question, if I may, sir. On the JBF acquisition, what kind of timelines are we looking at? Is it too early in the status to be talking about numbers right now? And what kind of investment, if you can give us any sense of what kind of investment will be required from our side, apart from whatever, is available in terms of, in terms of their debt?
So JBF Petrochemical, it's a legal process now. The matter is with the NCLT. So difficult to predict any legal process timeline. But as a GAIL, I can expect that may take 3 months to maybe some more into 6 months time for conclusion of that process. And beyond that, then we are parallelly working on various actions so that we are able to reduce our timeline for making this project operational. If everything goes fine, we expect that we will commission the plant within 24 months. And it will start production. So if I assume, I am only using the word assume,
sure.
If March 23 is the timeline when we actually get these all legal processes clear, so from there you can assume that 2 years will be sufficient to do this.
Got it. So somewhere in FY26 we start operations,
Not
give or take a few months, sir.
Not 26, 25.
Okay. Got it, sir.
Coming back to your question with respect to investment, so we expect that around 2,000 crore rupees, 1,800 crore, 2,000 crore rupees. This is actually an estimate we made at the time of when we were working for this project, but this actual will be maybe significantly less or around that the investment which will help enable us to make this plant operational.
Got it, sir. Thank you so much for taking the time to give such detailed answers, sir. Appreciate it. Have a nice day, sir. Thank you, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Mayank Maheshwari from Morgan Stanley. Please go ahead.
Hi, sir. Thank you for the call. Just a few follow-ups on the petrochemical side as well as how you're kind of managing the gas trading side. Can you just give us, out of the 8.5, 9 MMSCMD, how much volumes that you got impacted, how much of that you had to make up by sourcing LNG on a spot basis, and how much were you kind of reduce your volumes towards the petrochemical plant? That's my first question.
Okay. So on an average basis, we are not receiving 8.5 to 9 million gas from Gazprom, MMSC. Okay. So we have been able to reduce some around 2.7 to fertilizer plants, around similar levels to other customers, and then depending on the time, because we ran the Pata plant at full capacity, then we ramped down to 30-40%. So it is varying for Pata plant. So we reduced around 3 MMSCMD for Pata plant if we talk on average basis for last 1 to 2 months. So that's how we actually mitigated our shortfall from Gazprom. But this has happened not on a day. Actually, this has happened on different point of time. Like I said, we stopped supply of, we curtailed supply of fertilizer plant from 16 July. So that time we were supplying full. So for those intermittent period, we source LNG cargoes. And numbers can you?
Around 1.5 cargoes.
Around 1.5 cargoes per quarter.
In this quarter.
Around 1.5 cargoes we sourced from international market to mitigate the shortfall even after doing all these taking all those measures.
And sir, is that a number that you will have to now source regularly for the next few quarters?
Actually, this situation I am telling you, yes, we require LNG. We may have to source, maybe 1 to 2 cargo per quarter, but this situation is so dynamic. And there are 2-3 factors which derives that. First is that whether to source LNG, because we are significantly sourcing gas now from domestic market also, including IGX. So to that extent we source. Second, we don't know, sometimes customers also goes for shutdown, that enables us not to source the gas. Yes, Still, we may require to source the gas, but the numbers will be difficult to, say because whether it will be one cargo or two cargo, but certainly we will be requiring some gas from international market, LNG.
Got it, sir. So, and my second question was more related on the petrochemical side, both in terms of the strategy and the thinking process around the JBF acquisition, as well as that you talked about the petrochemical current operations. When you are kind of thinking about the current prices for petrochemicals, at what level of LNG are you comfortable to ramp that utilization rates up? Because I'm just trying to think, you are trying to maximize the volume per molecule. So where are you kind of seeing the level at which you can kind of see higher profitability on the spot LNG price basis?
So first I will answer JBF. GAIL is in business of petrochemical since 1999. Almost we are there for 23 years, and we have been very successful as far as the production and marketing is concerned. There is a good amount of customer base and lot of satisfaction among the customers. So we thought we should leverage our ability to this kind of project, and that's how we chosen to acquire this project. So this is actually in terms of synergy with our business, and also if you say for diversification little bit. So this is our thinking about JBF. What was your second part of this question?
No, sir, I was just thinking more from a perspective of the existing petrochemical capacity itself. How are you kind of thinking about at what levels of LNG will you be comfortable in ramping the utilization rate?
Got it. So it is difficult to say what are the petrochemical price, because the level, sustainable level are two factors. One is what is the market price of petrochemical. It is also significantly changing time to time. We have seen even in this year 1,25,000, 1,27,000. We are now seeing around the level of 1,15,000. So this is one factor which determines the level at which we will be able to sustain. So if I give you any number, which actually will be depending on the prices.
But at least today you are comfortable to ramp it up. That's the way we should think about.
No, today we are operating it because we can do things. Yes, we are comfortable because we could source the gas from domestic market, and being a portfolio holder, we are able to source gas for our petrochemical plant. Yes, we are comfortable to certain level, because if the more gas is available, we'll ramp up, but we are still not ramping up to a full capacity.
Got it, sir. Thank you. Thank you for the detailed answers.
Thank you.
Thank you. The next question is from the line of Sabri Hazarika from Emkay Global. Please go ahead.
Yeah, good afternoon, sir. So I have two questions. Firstly, as of today, what is the petrochemical utilization? So is it operating at 40-45%, or it's different from that?
Yes, it is 40%.
It is at around 40% right now, right?
Yeah.
Okay, sir. Second question is relating to the. I think I missed out when you spoke in the opening remarks regarding the diversion of your internal consumption gas to the CGD sector, I guess. So what exactly was the dynamics? How much were you consuming internally, and how much of it was it diverted to CGD sector? And can it happen going forward again, because CGD demand is growing? So could there be more diversion to this CGD mix? That's my second question.
With effect from 16th August, our allocation for internal consumption for use as a fuel gas for HVJ pipeline has been reduced by 0.45 mmSCMD. In order to supply or make up the requirement of CGD. That's the situation. And what was the second part of your question?
So this is out of how much? 0.45?
1.55 is total allocation has been reduced to 1.10.
Okay, and going ahead, if the CGD demand is going up, say second, third quarter, fourth quarter, it goes even further. Since we don't have that much of APM gas, Is there the possibility that this remaining 1.1 will also go down to 0?
Okay, anything can happen. It is not correct on my part to speculate anything because there are some domestic gas available which can also come up to the system which are not currently coming up because of the lack of connectivity with pipeline. So it depends on dynamics and there may be possibility. I am not denying, but I cannot say so.
Right. And just a follow-up on this, that your average tariff realization has actually gone up during Q2 versus Q1. So was it some sort of a pass-through of this, or is it like a natural increase?
No. It's not a pass-through. You see, our volumes are gradually increasing on Jagdishpur-Haldia pipeline.
Right.
So Jagdishpur-Haldia pipeline, even with phase 1 tariff, is significantly higher than any of the pipelines tariff. So when the volume supply is increasing to Jagdishpur-Haldia pipeline, it will lead to increase in weighted average tariff realization. It is not to any increase of pass on of fuel consumption and all that. That benefit we will be getting subsequently when PNGRB revises the tariff. But currently it is not because of that.
Right. And your transmission volumes have also not fallen that much considering the fall in marketing volumes. So why this deviation?
There are certainly the other suppliers have supplied to consumers using our pipeline because they continue to supply. The disruption is in our supply side, not on the supply side with other shippers. So had that not been there, our volume would have been 117.
Right. So you are saying some other sources have made up for what has been done.
Not made up. Let me put it different way. Because our supply disruptions are there from upstream, it has gone down by 8 million. Other continues to supply because there is no such challenge, at least to our knowledge, with other suppliers domestically.
Right, sir. Fair enough. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Varatharajan from Antique Limited. Please go ahead.
Yeah. Thank you for taking my question, sir. A couple of questions. One on the follow-up of the reallocation of domestic gas for pipeline operations. What is the gas which is filling in the void at this point in time? Is it like LNG or some other source? And you were saying that whenever the tariff revision happens, it will get compensated. When do you expect that to happen?
Sorry, your voice was not very clear to me. Pardon me, just repeat it.
One time. So, I was checking. Yeah, is it better now, sir?
Sorry to interrupt. Mr. Varatharajan, can you use the handset mode while speaking and not the speakerphone?
Yeah. Is this better?
Yeah.
Yeah. So, yeah, my question was on the deallocation of domestic gas. What is the gas which is filling in for the deallocated volume? Is it LNG at this point in time? And as far as so
it's RLNG.
Okay. So, and it is likely to remain RLNG, or do you think we will be able to bring in some other?
It is likely to be RLNG unless we are able to source some market-driven price gas from domestic sources. Till that time, it is RLNG.
And on the tariff part, you mentioned when the tariff revision will get compensated. When do you think that is likely to happen?
Actually, you see, in terms of tariff regulations, the fuel cost is passed through.
Yeah.
And the tariff revision, because this is pertaining to HBJ, tariff was last revised in June 2019. And in terms of tariff order, it is supposed to be revised now. So we are in the process of submitting the tariff to PNGRB, and we expect them to take normally they take 3 to 6 months. We expect that to be available maybe next beginning calendar year or maybe financial year.
Fair enough, sir. My second question was on the CNG that you volume you sold as part of GAIL Gas as well as your standalone entity.
Sorry, once again.
So you were talking about GAIL Gas volume of 5.5 MMSCMD, out of which how much was CNG?
Sorry, I don't have readily available answer what is the CNG, but we can offline answer you.
Fair enough, I'll come back. Thank you.
Thank you. The next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for this opportunity. You referred about sort of resorting to additional sourcing from domestic market, including IGL. What sort of quantum are you sourcing from this?
Let me answer you this way, that it cannot be a certain quantum because it is based on first availability at IGX, how much gas is available at IGX. But in recent past, we have sourced a good amount of RLNG or gas, maybe 25 to 30 million during this last 1 month only.
25 to 30 million. Could you clarify the units, sir?
Unit-based totality. I am not talking MMSCMD. I am talking in terms of quantum.
Right, sir. And in terms of the capex plan for the H2, which are the key pipelines which will get commissioned during the second half of the year?
So the pipeline, primarily Jagdishpur Haldia pipeline, some of the lakhs of Jagdishpur Haldia pipeline will be commissioned. And Dhamra Angul. Majorly Dhamra Angul.
Right. From the capex portion, which are the other major deliverables which would come through in the second half of the year?
So it is only pipeline, mainly on pipeline only this year.
Fine, sir. Thank you.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thank you and good evening. So the first thought is, if you look at your gas transmission segment, is there any loss you're booking in any of the sections already commissioned in JHBDPL? And when do you expect the JHBDPL project to start generating a bit positive? Hello?
JHBDPL tariff is not negative because you see, let me give total perspective about JHBDPL. JHBDPL pipeline, we envisage a capex around 15,000 crore. And if we consider net of grant, I am giving a round of figure, it is 10,000 crore. Currently, the tariff for JHBDPL has been worked out by PNGRE based on almost 1,800 crore rupees. If we talk of net of grant, around 1,500 crore rupees or so. And that tariff is 65 rupees or almost 65 rupees per MMBTU. So the tariff which has been notified by PNGRB is only for phase 1 based on the capital expenditure net of grant is around 1,500 crore. If we see that way, then we are significantly in a good position. We are not negative, we are positive. And the capex we have already incurred, which is for the phase 2 and beyond. So that tariff will come any time from now, and that will, on time value of money, that will be determined based on time value of money, since that has not yet been given by PNGRB, though we have incurred the capex. If we see that way, so that tariff will be available to us in coming time, maybe next year. So it's not even negative if we consider those capex. If we consider total capex without considering commensurate tariff, certainly you can say we may be negative, but we are not, because that tariff has to come considering the capex incurred in prior period, maybe in next year.
So if you were just to take this discussion further, when the entire JHBDPL is in operation, when do you expect that, and what is the kind of volume you can handle, say from FY24 or 25? And what is the kind of, ballpark incremental EBIT we should expect, say, per SCM or, in rupees crores? If you can give us some sense of that, would be useful.
So actually, I don't have readily EBIT available, but yes, I can to give 2 things. That this pipeline will be almost, this is 16 MMSCMD pipeline, and we also got it expanded to 23 million if we consider, Dhamra and Panipat and Haldia. So this pipeline pipeline will be almost fully utilized if we talk of 2 years from from today, because we have anchor customer available for this pipeline, and this will be we will be able to utilize. And as we convert into PNGRB regulation and the pipeline, even if we utilize 75%, we will be having 12% post-tax return.
Okay. And the second thought is on the gas marketing. We heard that you had to buy spot gas at about $40. So have you incurred any loss on any lot of gas you procured from the spot markets in the last quarter? And what is the current profitability run rate for the gas trading segment based on the current Henry Hub and spot prices?
So I did not say that we bought at $40. I don't know where from you heard.
No, this is press news. This is a press report, yeah.
No, I don't know what press report. We had purchased LNG from a spot market. I said 1.5 cargo last quarter we purchased, and we are likely to purchase similar quantum in next quarter. So since this sourcing we are doing in order to fulfill our commitments in the downstream market, so the loss or the figure you are trying to know that what kind of impact we may have, the impact will be at what price we are able to source, because it's so dynamic. Nowadays the LNG in international market is available $21-25 ranging depending on what time you go to market. So the loss will be based on that. If suppose it further comes down, there may not be loss. If it goes up, there may be loss. So it is very difficult to quantify. But we only will buy to fulfill our commitments in the downstream market, and that to the ballpark number of 1 and 1.5 cargo per quarter.
Okay, thank you, G. I will come back in the queue.
Thank you.
Thank you. The next question is from the line of Maulik Patel from Equirus Securities. Please go ahead.
Thanks for the opportunity. Sir, do you have anything to share with this credit pilot committee which is government has formed?
Mr. Patel, we are not able to hear you clearly.
Yeah. Am I audible now?
So slightly. Can you use the handset mode while speaking?
Yeah, I'm in handset mode.
So because your audio is not clear.
Yeah. So I will just try to speak a little louder. Sir, any update you have with respect to the credit pilot committee?
No, we don't have any update. We are also waiting like you.
Okay. Sir, in case of the government or the credit pilot committee reduce the APM gas price from the current level of $8.56, you will see significant benefit in your transmission and also in your LPG business, right? Is the assessment correct?
Yeah, you actually not on transmission business, because as I shared, it's more or less pass through. But yes, on LPG, we will be benefited.
You will benefit now. And sir, as you mentioned earlier, also with earlier questions, that the tariff of the pipelines are likely to come up. And what we understand that PNGRB is in a busy finalizing the changes in the tariff framework. So when that likely to come? Next couple of months, is it possible that the new tariff framework will come?
So I am also guessing like you. So based on my meeting and understanding from them, the changes in tariff regulation may come this month.
This month. Okay. Got it, sir. And sir, last question. With respect to the demand perspective, you mentioned that the spot LNG has now come down to $20-25 per MMBTU, right? And then which was very high in the previous month. Do you see improvement in demand from the customers, or particularly from the refining customers, which has switched back to the liquid in the last couple of months?
Certainly, ours is a price-sensitive market. Any dip in the price will certainly bring at least new demand. Though even existing demand may also increase, but certainly it enables us to bring new demand.
So at what level do you expect the refinery segment to come back to the gas or the LNG market?
I cannot say about refinery.
For refinery, even this current price, which we say are slightly softer prices, it's not making sense, what I understand, for the refinery sector. And for any process plant, it takes time to plan to switch over from one fuel to another fuel. So, whereas the current phenomena needs to be seen how long it continues.
So the last question, when do you expect this breakwater facility at Dabhol will be completed?
We expect next year terminal to full weather terminal. Completely it will be full. So this is the last season. This was the last season when we could not have the advantage of having full weather. March 23 we talk of timeline.
Okay. And sir, what's the progress on the Dhamra where you have...
Mr. Patel, may we request that you return to the
Sure.
question queue?
Thank you.
Thank you. The next question is from the line of Kishan Mundra from Antique Research. Please go ahead.
Question from my end. So, sir, there is some 12 MMSCMD of high pressure, high temperature gas from RIL that is supposed to come for bidding. So, sir, would you be looking to bid aggressively on that, given that your Gazprom volumes are not coming in? Number one. And number two, will you also be bidding, let us say, on behalf of smaller CGD companies because they may find it difficult to bid on their own?
Right. Second portion I will reply first. Unless somebody approaches us, how can I bid on others' behalf? As a marketeer, certainly I will bid. But if I have to bid on somebody's behalf, they have to come to me, and we can always look for that. But coming back to first question, yes, as a major gas marketeer of the company, we always look for sourcing the gas at a competitive price which is acceptable to domestic customers. We'll certainly do that.
Okay. Okay.
Thank you. The next question is from the line of Somaya from Spark Capital. Please go ahead.
Thanks for the opportunity, sir. So the first question was 1 to 1.5 cargoes that we have
Sorry
bought.
to interrupt, Mr. Somaya. We're not able to hear you.
Yeah. Is it better now?
Yeah, much better. Thank you.
Yeah, thanks. This 1 to 1.5 cargoes that we have, sourced. So the end prices for this cargoes would either have been oil linked or gas linked. So is it fair to understand that these cargoes being procured from the spot so would have been a loss making proposition? Is that the right understanding?
Actually, yes, if you really see only financials, you can say so. But it's not because of that we are buying. No entrepreneur will do that. It is to fulfill our commitment. Because of disruptions in Gazprom supply, we are sourcing the gas to only fulfill those shortfalls which are required to fulfill our contractual commitments. So it varies depending on the shortfalls we have, and in order to meet that shortfall, we will be certainly sourcing. And to the extent there is a difference in the long-term prices and the price at which we source, there will be profit or loss.
Understood, sir. Just a follow-up on this. So we said we had cut 2.7 to fertilizer and 2.7 to other customers. So which means this 5.4 is not part of take or pay. So we are okay cutting it without having any payments that needs to be made from our side for cutting this 5.4. Is that the right understanding?
Yeah, it's the right understanding. Rather, if you have gone through the contract, there is a level below take or pay. That is supplier pay. We are not operating for major customers the supplier pay. So there is no question of any penalty at take or pay level. That is our contractual commitment.
Okay. Just one last question, sir. In terms of volume ramp up for Urja Ganga, in terms of fertilizer plants, what is the status? And overall, next couple of years, how do you see volume being ramped up in the Urja Ganga pipeline? If you can give an MMSCMD number, it should be helpful.
So Urja Ganga now, there were 4 fertilizer plants. Matix has already been running since last more than a year, and Gorakhpur has got commissioned more than 6 months ago. Barauni, Sindri are almost on the verge of getting commissioned. They will be expecting commissioning in December month. So with this, we have 4 fertilizer plants almost now ramped up. If we add up all the fertilizer volumes, there will be around 7.5 MMSCMD of RLNG plus other smaller customers and CGD players will make it finally by the next financial year in the range of 9 to 10 MMSCMD.
Thank you.
Thank you. Ladies and gentlemen, that was our last question. I now hand the conference over to the management for the closing comments.
Thank you very much. I think we were able to answer most of the questions. But one question which I said I will be answering offline if the question asked was whether the question asked was what is the CNG sales as a part of total sales by GAIL Gas out of almost 5.5 MMSCMD CNG sales by GAIL Gas. So that question was unanswered. I think we were able to answer most of the questions. If any of the participants has got some more questions which they could not ask or they may have, they can contact our investors relations team. We will be happy to answer those questions. Thank you.
Thank you. Ladies and gentlemen, on behalf of Yes Securities Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.